Welcome to the Passive Investing Show. I'm Ashley Wilson, and I'm joined here with my co-host, Jay Scott. On today's episode, we got to interview our good friend, MC Laubscher from the Cashflow Ninja.
Yeah, so this was a great episode. So number one, MC has some tremendous background in passive investing. He runs the podcast Cashflow Ninja, where over the last 6 years, he's talked to literally hundreds of investors in all different types of passive investment asset classes. And on this episode, he talks about everything from investing in real estate to investing in commodities to investing in all kinds of things. But towards like the middle of the show, we get into insurance, and he talks all about different insurance investments. So he talks about these things called life settlements, which is really interesting. And then he talks to us about this idea of infinite banking, or being your own banker, basically being able to invest money into a life insurance policy that's earning returns within the policy, but also allows you to borrow back and invest that money elsewhere. And it's a really interesting concept. So while we do talk about a whole lot of things on this show, I think the insurance side of things is really, really, really interesting. I learned so much. MC is such an intelligent guy, and I think you're going to love this show. So without any further ado, let's welcome MC Laubscher to the show.
MC, welcome to the show. We're so happy to have you.
Thank you for having me. Really excited for our conversation.
Can you let our listeners know a little bit about you, your background, and what you're up to today?
Yeah, so I'm originally from South Africa. I grew up during a very interesting time, obviously during South Africa's history, and saw a lot as a young man. And then when I graduated university, I came to the United States. I traveled initially, but I had a scholarship playing sports in university in South Africa. So I ended up playing in a sports league in the United States. And you know, when I came here, it was literally a backpack, one suitcase, $500, sense of humor and a sense of adventure. And I was just blown away too. Although I was just traveling and eventually ended up playing sports, I was just blown away about the incredible opportunity in the United States that the country provided, and the upward mobility available to absolutely anyone that really applies themselves. So I was very, very excited. Having been fortunate to travel and see quite a bit of the world, I was just, again, blown away with the environment that existed here. So I played sports for up until 2007, and I traveled quite a bit for that. And when you're playing sports and traveling on the road, you can get into bad habits. So I made sure that I didn't get into bad habits. I started reading a lot. I was that guy on the bus or on the plane that's reading economic books and history books and books on investing and so forth. And then I came across, my mother actually gave me Robert Kiyosaki's book, Rich Dad, Poor Dad, which really inspired me. That was the one thing that pushed me over the edge to finally take action. And probably within 6 months after reading that book, I bought my first property. And then I got tenants into the property. I rented it out, collected the rent, and paid all of the bills associated with it, expenses. And at the end of the month, there was money left over. And I'm like, wow, kind of like in the book and the other books that I've read. This is incredible. How many times can I do it? And it was kind of that light bulb moment that I had at that time. And then as I was mentioning, I was playing sports and traveling quite a bit. So it was very difficult to maintain, I would say, conventional employment. Let's just put it that way. There's not a lot of people that are going to say, yeah, sure, come and work for me. How many days a week are you going to work? Well, I kind of travel all the time. So maybe like 2 or 3 days a week, So I had a friend that came from a very wealthy family on the north side of Chicago, and they actually had a huge portfolio of multifamily properties. And I was very interested at that time in real estate, and so he said, "Well, why don't you come and work for me a little bit? We'll find something for you to do." And I have to say that was one of the greatest gifts, because I literally started right at the bottom. I literally started picking up trash on the properties, the multifamily properties. And then eventually, I started just helping out the guys who were doing a lot of the construction. So eventually I was like painting and helping with apartment turnovers, to eventually running construction crews, to eventually like doing leasing and contracts and dealing with vendors. And essentially I ended up managing over 500 units for him at one point. And then I got my broker's license. I was part of his acquisition team. I learned quite a bit, like literally from the bottom up, and saw the ins and outs. And what a just an incredible gift that was, just to see the all areas of the business essentially from that angle. But I think like another thing that would be valuable in the story, another big, I would say, a light bulb moment is, that friend of mine and his partner, they were, and I call them the Cashflow Ninjas. They essentially were the dominant players in that specific niche on that side of the market. So when I was trying to approach other investors, because I knew there was one investor in particular that wanted to sell this bundle of properties essentially, and I was really targeting him, couldn't get anywhere. Went into office the one day at 7:30, just walked out of my friend's partner's office, and they just closed the deal. And I looked at this and I go, there's got to be a learning moment here. Learning moment. What just happened? And the lesson that I learned there was that these guys were cash flow ninjas. They literally were the dominant players. Nobody was going to think about buying or selling real estate, especially specifically the multifamily that they were into, without talking to them first in that market. And I realized that there was a game being played at a different level, just like there was in sports. And I realized that these guys were playing at the top level. So a weekend warrior, it's tough to compete with them. How can I partner with them? How can I invest with them? And that was a huge light bulb moment for me, making that one big switch, which changed the trajectory of everything that I was doing and how I was looking at things. Because instead of trying to be that person that needs to know everything and do everything myself and find all these properties and being that weekend warrior, I can go and find the best operators, the cash flow ninjas, the dominant players, and find ways to partner with them. And usually those folks have communities, which is incredible. So it becomes fun too, it has the team aspect of it too, which was another part of sports. So obviously a lot of lessons learned, a lot of knocks and black eyes and stuff in the world of investing in business. On the business side too, I started a couple of companies. I was not successful in most of them, which was also a gift, but eventually found my way, capitalized on a couple of trends, the online online trend, and more specifically like virtual trend, virtual consulting and so forth. In 2015, wow, time flies when you're having fun. I had two companies that really started taking off. One was in the insurance world, and we're still doing that. It's called Producers Wealth, and we do virtual consulting with clients in all 50 states, and we help them set up and establish their own banking system utilizing specific insurance products. And then, of course, I started a podcast after that called Cashflow Ninja, which was just a passion project, really, to learn more about investments, passive investments, and get to learn from incredible folks, the best minds in business and investing. And that kind of turned into a full-blown education company now, 6 years later. So I never thought that we would get the traction, downloaded to over 180 countries, millions of downloads. I've met incredible people and had a lot of fun doing that. And then we've also raised capital through a different company to participate in syndications and invest in syndications through Producers Capital Partners. But yeah, it's been a lot of fun, and it just keeps getting more fun.
Well, I want to dig into the whole be your own banker idea, because I know that's something that gets talked about a lot, and I know there's a lot of confusion around it, and I think that's a topic that I think a lot of our listeners would love to get more information about. Before we go there, though, I do want to talk about your podcast. So you have a podcast called Cashflow Ninja. You've been hosting this podcast how many years now?
Six years, so since 2016. Yeah.
Yeah, I think I was actually on the show like in
Yep.
2017 or 18, a long time ago.
Yep.
And so I'd love to talk a little bit about your experience as a podcast host and how that's contributed to your success overall. What's the value of having the podcast? What's your purpose for having the podcast? And how has it kind of furthered your goals for investing and passive income?
That's a great question. So I was reading a lot before I did my podcast, but I have to say, like, from a learning experience personally, it just took my learning to a whole nother level, because essentially I got to interview the best minds in business and investing and ask them questions that I had at that time and spend time with them, for about an hour. So you develop great relationships, friendships, and so forth. But it really just exponentially increased my learning, because if you think about it, every week you're literally just sitting down with folks that are doing incredible things. And it's also helped me identify a lot of opportunities too, because my show went pretty wide, right? It's not very nichey. So there were folks coming in from all types of different industries, and we've covered business, we've covered commodities, we've covered crypto and blockchain technologies, we've covered real estate, we've covered all these different things, and it's incredible that even though you're in different niches, in different markets, there's certain principles that are kind of universal, which has contributed to success. It also helped me to understand, I would say, become a better, well-rounded investor, because I was never really that interested in the equity markets, let's just say, for example, right? Because it's not something that that I invest in personally. But then all of a sudden I have folks that are, so I get to learn a lot about equity markets, how that works, that entire space, and that helps me become a better, well-rounded investor. For example, to understand other asset classes and how they relate. When you learn about debt markets, now that's going to bore a lot of folks, how debt works, right? But actually it helps you understand real estate much better on the debt side, and the debt market's the biggest market, on the planet. And then from a purpose standpoint, so I guess, I started as a guide, essentially learning and have folks learn alongside me. And I still am a guide, because I continue to learn and I continue to have conversations about things that I'm not very knowledgeable about. But it's also helped me, the purpose also is providing a platform with ideas that, in a world where there's a lot of uncertainty, there's a lot of changes, a lot of disruption, it's pretty exciting stuff if you think about it. But it could be scary for a lot of folks too, right? And then there's a lot of chaos. Usually when there's uncertainty and there's change and there's disruption, it's pretty chaotic. Environments get pretty chaotic. And in the marketplace, this provides a lot of fear and nervousness and that kind of stuff for folks. So from a purpose standpoint, I'm like, I'd like to create this platform where we talk about all the different things that we see and all of the changes and all of the disruptions and why there's uncertainty, but also then bring about and share opportunities. Because you can find yourself in a mindset, a little bit of scarcity when you talk about uncertainty and changes and fear and all that kind of stuff. But on the other side of it, this creates a lot of challenges, which is incredible opportunities during this time. So that's kind of been my purpose and my mission now, is how do we share information that is very applicable to the world that's going on right now, that'll actually help folks see the incredible opportunities that exist in times where, there's a lot of uncertainty.
So, MC, you obviously have interviewed a ton of people on your podcast, and I'm sure that you have also personally invested in some really cool alternative investments. Just was wondering, what were your favorites? Which ones do you think, just are probably non-traditional that most people don't think about? also, too, quick plug as well. I know you have your book, The 21 Best Cash Flow Niches. I actually have read that book. It's fantastic. And I'm sure some of the things that you probably enjoy are included in that book, and people can still get that book on your website. But I was just wondering if you can kind of highlight a few, maybe 3 or so, that you really gravitated to.
Yeah, there's some interesting stuff in there. So it's just, and essentially, I love the alternative investment world. And some of my favorite ones that I've enjoyed, obviously real estate. That's, that was my first kind of niche. I started in single family and now multifamily. I love multifamily. I think, if you just look at, where we are now and where we will be 5, 10, 15 years from now, people are always going to need a place to stay. And obviously there's different parts of different markets within multifamily that produces a certain value proposition. So I love real estate. I'll always love real estate. One thing that has really been very enjoyable too, and again, this is just partnering with someone that's really crushing it in their space and have built a great community, is resort investing, which I share too. So, Josh McAllen and his team, they've done a phenomenal job. I've had a lot of fun partnering in some of those projects, and it's one of those alternative investment niches, which is very, very, very misunderstood. When I first got involved, I'm like, let's learn everything that we can. And then when I started to see the business develop, I was quite just blown away with that specific niche, where the majority of hospitality is struggling quite a bit and has taken a big hit and hasn't really come back. There's a very small niche that has really performed surprisingly very, very well. So that's been a lot of fun, and that's cash flow you can enjoy. As I always say, you can literally, stay in your own resort, have some champagne, on the property and enjoy it.
Not to interrupt you, MC, but for anybody that might want to learn a little bit more about hospitality, and specifically Josh McAllen, he was actually guest on episode 9 of this show, so feel free to go back and watch that from a few weeks back. So apologize for interrupting you, but I did want to get that little plug in there for Josh since you mentioned his name. Yeah,
absolutely. And then, I would say I've always liked commodities. Growing up in South Africa, it's studying economics, especially there in high school and university, it's very commodity focused because they're one of the biggest gold producers in the world, still is. In South Africa also, this is a fun fact for folks listening. In the commodity world, the majority of the world's platinum is mined in a part of South Africa, and it overlaps kind of with Zimbabwe. There's actually an area that I took my wife on safari the first time we went down there that's called, when you drive on the way there, it's called the Platinum Highway. And you literally just drive there and you just see platinum mines on the way to in the middle of nowhere. It's something different, of course. So I've always loved commodities. And so I've invested in certain commodity businesses and certain commodity projects, physical things, especially during uncertain times. I love hard assets, which I've mentioned real estate, I've mentioned the resorts. Commodities kind of plays into that, and there's so many different strategies. Folks might be familiar with, you can actually buy the commodities themselves, like a Krugerrand gold coin in South Africa, right? Which would just be a legacy piece for the kids and some wealth insurance. But you can invest in very profitable businesses that's involved in that space where, certain mining businesses. And that's essentially the route that Warren Buffett took when he got involved in that business too, because it gives them access to a discounted form of commodity, and in his case, with Barrick Gold, is it gold. And I'll mention one other investment, which it's sort of in the life insurance niche. It's called life settlements. It's a fascinating asset class. I've learned a lot about risk management as an investor from life insurance companies, believe it or not. Life insurance, you mentioned that word, and folks think, oh my goodness, it's a boring kind of business. It's not something that gets people excited. But there's so much you can learn as an investor from life insurance companies in general, just looking at the business model that they have, how they manage capital, how they manage risk, because that's essentially they're in the business of managing risk, right? Whether you're property and casualty, whether you're a life insurance company. And one of the things that I saw specifically in the life insurance, on the life insurance side, is a way for risk management that institutions do, and also life insurance companies, and then investors like Warren Buffett. He loves that asset class, his life settlements, which is essentially, funds that invest in certain life insurance contracts. And there's a win-win relationship with that too. There's certain folks that are in a particular situation that want to sell life insurance policies for many different reasons, whether it's access to liquidity, whether they don't need it anymore, whether they kind of overclubbed for estate planning. And then there's a pool of investors that would buy that. So through that vehicle, you essentially can buy your equity up front, Warren Buffett, and that's why Warren Buffett loves it. And I'll mention one last one. Balancing portfolios is very, very interesting. Another concept that I learned from family offices, and there's a specific family office vehicle which they love, the first time I read this, I'm like, what? Are you kidding me? And it's the investment of teak, timber. And I'm like, really? So I looked into this. I actually spoke to a friend in a family office, and I said, is this like a thing? And he goes, oh, it's a thing. They take massive positions. And then I looked into the asset class, and I saw Ted Turner is like one of the biggest investors there. And then it's endowments, of Ivy League universities and institutions and so forth, because it's such a great, I would say, portfolio stabilizer. Because 5 years ago, the trees grew. Today, the trees are growing. 5 years moving forward, the trees are growing still. So it's fascinating. But I've had a lot of fun learning about all of these many different, investments in the alternative world. And if you find the right folks to partner with, you can have a lot of fun, meet a lot of incredible people, and have a well-diversified portfolio, as a passive investor.
I love all that. It's funny you talk about timber. My family and I were on vacation just last week, and we were driving up to North Carolina from Florida, and we're driving past all of these pine tree lots where it was clear that basically they had planted pine trees, and so everything was like 6 feet apart and square, and so I was sitting there doing the math with my kids on the drive up. Instead of like hopping on Google and searching it out, I said, let's figure out like how much an acre of pine trees could potentially pull in. And so it's actually, we came up with some really interesting numbers. I went on to Google and verified that, it's a great, it takes a long time to really start generating the passive income from a timber field.
Yep.
But in 10 or 15 years, you start generating some massive returns very quickly, and you can roll over year after year. So interesting that you mentioned that. We were just thinking about that last week. I want to jump into insurance. So you talked about a couple things so far. You talked about life settlements, and I would love to hear a little bit, like for anyone that's interested in it, it seems a little bit morbid. Basically, you're buying a life insurance policy. You only get paid, presumably, if and when they pass and can collect. So it seems a little morbid, but still, an investment's an investment. I'd love to know a little bit more about like how, if somebody wanted to get involved in life settlements. And then I want to jump a little bit into this concept of be your own banker.
Yep. Great question. Yeah. And I have to say, the first time I learned about that asset class too, it kind of had like a very, I don't know, it had a weird feeling. You're like, what's going on here? This sounds a little bit weird. And then I started to look into it and learn more about it. And I started to realize, because I look at both sides of the investment, and everybody has to be served, right? There has to be a win-win. There can't just be a win-lose. And I started to realize that there was a lot of folks, and there are a lot of folks still in very, very bad financial situations that they are looking, first of all, they've had life events, they're in a bad financial situation, and they're looking out for a way to live the rest of their life out comfortably without having to worry about the financial side of it. So a lot of this actually happened during 2008 and 2009, where there were folks that took a massive hit in the stock market, lost the majority of their money there. Then they had their house, the primary residence. So most people, that's their two biggest assets that they have. So they lost, they were essentially underwater, or they lost the majority of the equity in the home. And now they had, let's just say, a medical event. They became really, really sick. And they're like, what do I do now? I don't have essentially any other options. Well, then they started to realize that they did have a specific life insurance policy. So what are their options at that point? So they can essentially see if there's any riders in that contract that can kick in to help them out for a little bit, or that life insurance policy that they had might have a death benefit with not a lot of cash value either. So now you're like, there's still no liquidity event here to help me in my time of need. So essentially what they can do is they can find a group of investors that would purchase that life insurance contract from them, and they would, in a lot of these cases, get 4 to 5 times the amount of cash value that they have in the policy. So let's just say they have a life insurance contract, the death benefit is $1 million, and they have about $100,000 in their cash value, which is the money in the policy. But they know that that's probably not going to last them, maybe give them 1 year. Well, they can sell that for $500,000 essentially. So now they have access to some money, they can live out comfortably. And it's for folks that their life expectancy is about 4 to 5 years. So they would be able to live out comfortably, and in the end, help the family arrange finances. And in the end, the investors then, who keeps paying for the contract and have already paid them half of the value of that policy in that example, they get paid out the full death benefit at that point. There's a lot of actually celebrities that have utilized this. Johnny Carson's sidekick, Ed McMahon, is a famous example where he was in a lot of financial trouble. And his wife actually said, because they actually utilized this vehicle and they sold one of his life insurance policies, and his wife afterwards said, that was such a help to them because it gave him a great quality of life towards the end of his life. They didn't have to worry about the financial stress and the money and so forth. So when I started to see that side of it, and I also, I found a great partner in that with the right philosophy, right approach, just doing business the way that you want business done. With the right principles and values, that helps a lot, because are there undesirable characters in that space? Just like every space, there will be undesirable characters. So I think once I started to realize that there's a win-win where there are folks that are in a particular bad financial situation that need liquidity, they don't have really any other options or any other avenues to get liquidity, that's a great way for them to get it. And then there's a great way for investors to pool and to essentially help them with the liquidity, and then also, profit on their end of it. And this is all legal, by the way. This is settled, settled courts on this, because a lot of folks might be listening to this and say, how is this even legal? Yeah, this since around about the early 1910s, there was a settled court case around this. There's a ton of institutions that participate in this type of investment. Life insurance companies themselves buy policies of other insurers to hedge as a risk management strategy. And Warren Buffett and actually Bill Gates are just two of the biggest personal investors in this specific field. So, yeah, I think once I learned more about it and I understood it better and I saw the big picture and both sides of it, I started to realize that, just like every entrepreneur, there's challenges, there's problems. Somebody went in there and came up with a solution that's win-win for both parties, and now there's an entire industry created around it.
That's great. So as long as we're talking about insurance, you mentioned earlier that you run a company that focuses on allowing you to, quote unquote, be your own banker. And I believe the common terminology there is infinite banking. I'm sure a lot of our audience has either heard the term or is familiar with the term, but probably don't know it in much depth. Can you tell us a little bit about this concept of infinite banking and how it works and how it may be valuable for some or all of us as investors?
Absolutely. When you look at a framework, and I love frameworks because anybody can use a framework and apply them to what they're doing. So I always try to develop certain types of frameworks. And because essentially I always say you don't have to be a Rockefeller to do what the Rockefellers do. You can see the framework from what they're doing in their planning, and then apply that in, to where you wanted to apply it, and take smaller steps, because it's gonna make massive changes drastically for you during your journey. So essentially where this comes in, if you look at the framework, most people make their money in one capacity or another, either as an employee, a self-employed person, a business owner, or investor. And then essentially then after that, they have to position the capital somewhere. So after the capital has been created, it has to be put somewhere. And then once it's put into a vehicle, well, the capital is then accessed to deployed into investments, passive investments, alternative investments, or, if you're a business owner, back into your business. And then, of course, you have to protect all of this through proper tax strategy, asset protection, and estate planning. So from a framework standpoint, where the infinite banking strategy comes in is where you position capital. So where do you position capital that is efficient from a tax standpoint? It's great from a savings standpoint, not just an investment standpoint, savings too, which is essentially you're putting your capital somewhere. It's not at risk. You're earning a very, very minimal return on it, because there's essentially no risk associated with, right, in a savings vehicle. And then also, where can you position it where you can effectively and efficiently use it to accomplish more than one objective? So what I mean by that is, I'll just share a quick example. I had a mentor, this is back in the early 2000s. This is the first time I kind of came across this strategy of collateralization. I had a mentor in real estate, and what he did in the 70s, he was always sharing, old war stories. And he was telling me, well, in the 70s, we would take all the money that we make in our business and we would put it in a CD. Now, your listeners are probably choking on what they're chewing right now, or taking a sip of water, but people used to do that because it would pay a double-digit interest rate at that point. So let's just say they would put $100,000 in a CD. They would, let's just say, earn 10% on that, or a double-digit interest rate. Very high compared to what you're getting today. They would go back to that same bank and then say, Mr. Banker, I have a CD for $100,000 in your bank. Can I get a loan that's secured or collateralized by that CD? And the banker would say, well, yeah, we take deposits, and in the back end of our business model, we make loans. That's our business model. So you would then give them a loan, let's just say for $90,000, right? 90% of the value of their CD. Then they would take that $90,000 and then they would buy real estate with it. And let's just say that even if they get around about the same interest rate at that point, so it's kind of a wash, but you're earning double-digit returns on your CD. And now you're deploying that capital, buying real estate, which gets you all the tax benefits, cash flow, appreciation, and you pay that off over time. Well, now what you've effectively done is your capital is working in both places simultaneously at the same time. It's in the CD, earning that high yield interest, and it's also allowed you to acquire real estate, utilizing essentially a loan or a line of credit which you secured with your capital in that CD. We do the exact same thing in life insurance. Most folks think of life insurance as somebody has to die in order for someone else to benefit. And for the most part, because there's different ways, of course, how you invest, there's different strategies with life insurance. Most folks that buy life insurance on the retail side understand that's sort of why you buy life insurance. What a lot of corporations, institutions, banks, and family offices and wealthy individuals do is they buy these policies to essentially position it as a vehicle, as a cash saving vehicle, because the money that you're putting into those policies is the principal is guaranteed. There's a guaranteed growth on that policy. We utilize mutual insurance companies, which is not listed on the stock exchanges. They're outside of the stock exchanges. They're owned by the policyholders, which is the shareholders. They've been around since the mid 1800s. And they've been profitable since the mid 1800s. So they pay these dividends every single year. And some of them have paid dividends since 1847, 1850, around about there. It's pretty impressive to be profitable that long for so many years consecutively. So you earn these dividends. This is all tax-free. The growth and the dividends is tax-free. So there's no more taxes due on the growth and the dividends in the future. And then essentially you build up this cash value, and the policy is structured so that the majority of the premiums are going straight towards this cash value, the savings aspect. And you can establish a line of credit secured by this cash value, which you can access. So your capital is guaranteed. It's earning tax-free growth on it, and you get to establish a line of credit against it, which is also tax-free because it's a loan. You don't pull the money essentially from the life insurance policy. And then you can repay this credit line as you use it. It's sort of like a revolving line of credit, just like a HELOC. So what can you use it for? If you're a business owner, you can have these policies, position capital in there, access the capital to grow your business. If you're an investor, you can access this capital to grow your portfolio of investments. And the strategy that I use with that is you fund these policies, and I've done this for 13 years now myself, but you fund these policies, you build up the cash value, you set up credit lines, establish that, you use the credit lines to fund your investments, and then the cash flow and the proceeds and the liquidity events from investments and or your business, you just use to pay down this credit line again. Another thing I think folks would find interesting too is it's a private contract, all of this, between you and an insurance company. So this isn't public information, that there's no credit checks, there's no credit reporting, that kind of stuff. When you do it with a mutual insurance company, it also gets asset protection in most states of the United States. So it's not something that creditors or predators can get to. And of course, when you pass, the death benefit of your policy, which is usually a multiple of your cash value, goes towards your beneficiaries, tax-free. So it's great from an estate planning standpoint. So there's so many different strategies associated with it. One strategy too for business owners and investors is when they fund these policies, they can, during their career and journey, use this to fund their business and investments. And essentially when they're looking for retirement, it could be a source of tax-free retirement. You can establish a family bank, combining policies of the family. I have policies, my wife has policies, our children have policies. We put it all together in our family bank. And essentially, in this family bank, we fund investments and projects and businesses and so forth. So it's pretty powerful because it essentially gives you full control over your capital. You can access it whenever you need to for whatever you need to. And in our case, for obviously acquiring more businesses and investments. And the capital essentially stays in the family pool. So, there's so many family contingency strategies. And again, a lot of this is modeled after, the Rockefeller family. A lot of folks call it the Rockefeller method. Because they've essentially created a family strategy around this, utilizing these life insurance policies, which essentially has grown the family's pool of capital with every single generation since they kept all the capital together inside of their family office. Which if you compare that with other families, there's a famous story, the Rockefeller family versus the Vanderbilt family, where the Vanderbilts kind of split the money, they gave it to the heirs, they spend it on very pricey real estate all over major cities in the United States and the world. And essentially, if you look at it now, there's a university with their name. There's probably some buildings with their name, but essentially the family capital is essentially, disappeared, where the Rockefellers, just with every single generation, the pool of capital just continues to grow.
So I was actually going to follow up with a question about that concept. I recently attended an event at Camaplan where they were talking about all of this infinite banking and how the Rockefellers were able to grow wealth generation after generation through this model. And one of the things that I found really intriguing that I was hoping you might be able to talk about is the fact that there's no limitation to the contribution of children. Whereas if you are paying your children under current U.S. tax codes, you're limited at $6,000 per contribution per year per child. So that provides a strategy as well, that if you have more than $6,000 to invest, that you have that opportunity to grow it at an exponential rate, especially because of the leverage, the arbitrage you were talking about earlier, of having that capital go to work and then having the money still grow while the money's working outside of that investment vehicle. So I was wondering if you could kind of talk on that. I don't know if you do that personally or help people structure how they can achieve that.
Yeah, that's a great question. So the one question that if you ask a lot of these family office families and wealthy individuals, how much life insurance do you want to buy? They would say as much as a carrier would underwrite on me. And the reason for that is because of the more that they underwrite, the more that they can contribute to these policies in capital. So there's no limit. They will underwrite you based on your income and your assets. So let's just start with the parents. So from the parent standpoint, the limit, you're limited essentially your income and your net worth. And that's why it's good to review every year too. Just modeling what they do in family offices. Every year they look at, all right, well, how much can we add, from a underwriting standpoint, how much will they add? Because we could add more policies and we could add more capital to this pool. The same with children. And children, the policies are usually based on what the parents have in place. So yeah, you can absolutely structure it where if you're starting to pay your children out of your business, which you can under the tax code, you can essentially structure these policies so you can fund that full amount in those policies. That's what I do. So essentially, you can absolutely do this. And they're part of the family's capital pool. And for children, a lot of folks would say, well, there's other savings mechanisms, let's just say for college and so forth, but it's very limited to education. So if you fund, let's just say, life insurance policies for children, and it also depends, on what age your children are. So if they're really, really young, college might not even be a thing the way the world is developing that quickly. But if you're putting capital in those policies, it's 100% under your control. So let's just say, and every child is different, right? Let's just say they're not into, college at all, but they'd rather go and learn a skill or start a business or buy real estate with it. Yeah, you can use that capital for that because it's 100% under your control. So it's pretty powerful to have these family banking strategies established. And I'll just share this with folks too. Sometimes when you model what they do in family offices, it doesn't even cost you any money. So what do I mean by that? When you start with a family office structure too, what a lot of these families start with is a family statement of purpose. And this is a great exercise to do. I love this kind of stuff, to talk about this stuff, because you could sit down with your family and essentially create your own declaration of independence as a family, which is your statement of purpose in these family offices. Then following that, well, what did the founding fathers in the United States do? Well, they established a constitution, which is essentially what they do in these family offices. So you can create your own family statement of purpose, which is your Declaration of Independence. You can have a family constitution, what the family believes, what the family stand for, the guiding principles and values. And then you get to the financial stuff, which is the family bank stuff, the family asset structures and legal structures, and the tax strategy and that kind of stuff. But it's really a lot of fun to lead with the the stuff that doesn't cost you any money. It's just time, and it's actually a lot of fun, brings families together, gets everybody on the same on the same page, and actually sets the North Star for the family. So I would say with a lot of folks, when you're looking at this holistically as an investor too, let's set your North Star first, your guiding principles, your values, and so forth, with these fun exercises with your family, and then you get the rest of the things in place, because that's going to determine essentially where you want to go. And what the vision is for the family. But it's a lot of fun. As you could probably sense, I'm very passionate about that conversation, because it's a game changer for so many families taking that approach.
Awesome. Love that. Okay. Well, I think we are getting up towards the end of this show, and like we like to do with all of our guests, we'd like to finish off the show with 3 questions. How's that sound?
Great.
Excellent. Okay, Ash, you want to take question number 1?
Sure. The first question, and I'm actually really intrigued to hear what you have to say about this, but what new thing have you learned about recently or are currently researching for an investment?
That's very, very, very interesting question. So I'm seeing a lot of very, very powerful trends, gaining momentum and motion. So, and obviously a lot of this is in the alternative energy space. So there's a lot of things that I'm just learning this industry and trying to immerse myself in what's happening. I've interviewed folks on solar projects, on wind projects, on hydrogen, and hydroelectric kind of projects, but I'm also studying the carbon industry. There's a lot going on there right now, which it's just mind blowing. So I'm studying that a lot because it's a trend, and it's a trend which I believe will result in a lot of capital moving. And as an investor, sometimes, even if I never invest in any of that stuff, it's really important to understand it and understand where capital is moving to and where it's going to move from. Because there's going to be a beneficiary, and then obviously there's going to be an area that it's going to be pulled from. So as an investor, I want to know what's going on in the marketplace, where capital is moving. And I always said that to folks too, the same thing about crypto, because there was one year that I just immersed myself in crypto and blockchain technologies. Even if you never bought a Bitcoin, or even if you never ever invested in a single blockchain business, it's important to, as an investor, just to understand how it could potentially impact your business or your industry, and also what would the result of this be, of this trend? Is it going to be sustaining? Will capital flow there? Because then I obviously need to know about it. Where is it flowing from, and so forth. So that's what I'm studying. So I'm a lot about the carbon space, because I believe it's a huge trend, and there's a lot of capital that's going to flow there.
Love it, and 100% agree with you. Okay, question number 2. What current legislation or what current economic situation do you think poses the greatest threat to your investments, or to your investing strategy, or to the overall markets that you're investing in?
That's a great question. So, what biggest threat? I would also always say that assets are priced in obviously in currencies. And this is also, as an investor, I'm not a Forex trader. I'm not a Forex investor, but it's very important to understand what's going on in the Forex market, which then brings us to, the global financial system and the world monetary system. So I see sort of from a monetary system, the monetary system has essentially changed every 30 to 40 years, and we're now going on like 50, this US dollar dominance, the petrodollar kind of systems. And obviously there's a sunset on every system, as there've been before, when Richard Nixon took the world off essentially closed the gold window on August 15, 1971. Before that, we had Bretton Woods in 1944, New Hampshire, which the US dollar was established as the world reserve currency. So what threat do I see? I see that, there's capital moves where it's treated best. And when capital moves around the world from one country to another, it impacts currencies and their financial system. So I'm always looking at what's happening in the world financial system, what's happening in the world monetary system, and then I look at what's happening with the US dollar in relative terms to other currencies, and then what's happening to the US dollar, looking at it and pricing it in commodities, and so forth to understand what's going on. Because if you just look at the currencies, you'll see the US dollar has been an absolute dominant player for the past 2 years because there's still a massive demand for US dollars. It's a world reserve currency. A lot of current countries have expanded their currency supply through programs that they established since 2020. But South African rands, there's no demand for it because no central banks around the world have to hold South African rands as reserves, right? Foreign reserves. They do hold US dollars. So there's been a massive dollar dominance for a while. So I continue to monitor that because I see if there's a quick reversal on that, or there's a wild card or a black swan event. From a currency standpoint, that could impact obviously all the markets that I'm in and all of the investments and obviously the capital positioning. So what do I do to mitigate that? I look at a lot of physical stuff, and that's why I shared, I love real estate, it's hard assets. I love commodities and so forth. So I make sure that I'm well positioned into physical things, because if there's a sudden shift in that risk, it'll reprice in whatever, terms it needs to be revalued in at that particular point in time.
Great. And to conclude with our final question here, what is the best piece of advice you have ever received or can share with our audience?
Yeah, I would say that, and that's actually why my show is called the Cashflow Ninja. So Cashflow was a theme, but Ninja actually came from my dad, which is a martial artist. He's a pretty well-known martial artist. He used to travel 6 to 8 countries a year and teach karate all over the world. He's 74 years old. And what I learned from my dad is he pursues excellence in his craft every single day. So every single day, it's quite incredible. He gets up every day and he's just trying to get better. Because he'll never, his philosophy is, he's never going to arrive and, yay, I'm excellent. Excellence is something that needs to be pursued every single day. And sometimes with knowledge, another mentor of mine, Nelson Nash, used to call it the arrival syndrome, where with knowledge, sometimes folks can also be like, all right, I'm good. I've arrived here. I know everything now. There's no such thing, right? So you're always learning. So every single day I get up and I try to pursue excellence in my craft as a business person and as an investor. And I just try to get better, and I just try to learn something new every single day. And I'll continue to do that and continue to learn from amazing folks such as yourself.
MC, this has been absolutely amazing. Just incredible words of wisdom, some new concepts that I'm really excited about digging into. I'm sure our audience will as well. For anybody out there that wants to learn more about you, get in touch with you, learn about any of the stuff you've been talking about on this episode, how can they do that?
So cashflowninja.com is where our just all of our podcasts and content is. For folks that want to learn more about infinite banking and family banking and the life insurance strategy, they can go to yourownbankingsystem.com, and there's an informational presentation that I do around that, sharing a couple of strategies. So that's yourownbankingsystem.com.
Great. Thank you so much again, MC, for joining us today. If you are listening and want to get a hold of MC, please make sure to check out cashflowninja.com or yourownbankingsystem.com. If you enjoyed this episode, please make sure to like and subscribe on your favorite podcast platform, and you can also view us on YouTube, and you can also subscribe to us on YouTube as well. Thank you again for listening. We hope this episode helped you continue your journey having your money work hard for you.